Hi, this is Jay from Quantum Flow, and today is Tuesday, April 2nd, 2024. Please be sure to like and subscribe to our YouTube channel at QuantumFlobyJTNC to receive daily market recaps. Today, SPY gapped down just shy of $4 on concerns the Federal Reserve will not be cutting interest rates anytime soon. Treasury yields hit their highest levels since the start of 2024 on strong economic data, with commodity prices such as oil and gold continuing to rally. After the open, Fed Governor Daly said 3 rate cuts was not guaranteed this year, while Fed Governor Mester said she thought 3 cuts was still appropriate, although she did rule out a May rate cut. This type of mixed messaging spooked the market, and it traded near the lows of the day until the last hour, when it rallied a bit to close down $3.32 at 518.84. The market found support at the all-important 518 level we had identified for several days, falling to as low as 516.48 before recovering. Volume came in at 74 million shares, and the market closed below the lower trend channel that has been in place since the end of October. We mentioned in yesterday's video that while we expect higher prices this week, it would not surprise us to see 1 or 2 days close below the bottom of the trend channel, with Tuesday being a red day. Today was the second day with a close below the lower trend channel. We also stated we expected early price pressure to at least 520 before the market found its footing, and any hawkish remarks by the Feds would bring 518 into play. And if that failed, we stated that 516 would be the next place to look for a bounce. Once again, the quantum flow model predicted with uncanny accuracy what the market was likely to do the next day. We continue to believe the market will trade between 525 and the 518 level, but should the market close down on Wednesday, there is a higher probability of a break-in trend, and prices could start to move lower to as low as 504. Not this week, but over time. The bulls have lost the 520 level and need to recover this on Wednesday to convince the market that the uptrend is still intact. Quantum flow models are still projecting higher prices this week to as high as 527, with the market moving back into the trend channel. Tim posted in the pre-market at 8:40 a.m. He felt the market would hit his first lower target early on of 518.40 and continue to fall as low as 515.50. He felt the lower target would be a floor for the day. He also felt once the market found support at the lower targets, it would rebound and attempt to reach the upper target of 520.35. Certainly, the market did follow Tim's market view, falling to the low of 516.48 before rallying at the end of the day, moving toward Tim's upper target. Again, we see virtually every day, quantum flow models, or any models for that matter, use data points to determine probable outcomes. But that once an economic report is released or a Fed official has a chance to weigh in on the interest rate policy, models' assumptions need to be disregarded, given this is new information for the model to digest. We stress to trade what you see and to use the levels quantum flow provides as general guidelines to keep you on the right side of the market. And remember, quantum flow's post-market recaps tend to have a bit longer-term view of the market, while Tim is tasked in the pre-market with providing intraday price predictions, which are more sensitive to news or other economic releases. Learn to incorporate both of these pre- and post-market reports into your trading to gain a material edge in your days of trading. We continue to remain bullish and expect to see higher prices later this week, although making a new high this week is looking unlikely. The market will likely stall at the all-time high on any push up later this week. We've said for several days, with the market digesting these higher prices while it tests the lower trend channel, it has the potential to roll over, putting a cap on the market's advance. Price needs to clear the all-time high with conviction to march significantly higher from these levels. Longer term, we continue to buy all dips and did so today. We are also buying protection in the event of continued weakness. April is seasonally strong, second strongest month of the year. So we continue to expect higher prices this month. For Wednesday, our models see prices holding 518 with some early weakness, followed by a solid attempt later in the day to move back toward the lower trend channel. Deals are positioned pretty evenly on Wednesday for prices to rise or fall. So any economic news or Fed speak is likely to influence the markets. The only relevant economic report for Wednesday is ISM at 10 a.m. But once again, there is a host of Fed speakers, including Chairman Powell, speaking tomorrow. The first speaker, Fed Governor Bowman, starts talking at 9:45 a.m. We expect Powell to be consistent in his messaging, which will calm the markets, and believe it's likely the other Fed speakers will also toe the party line, which should create a late day rally. This year, we have seen all but one pullback last only 2 days and believe Wednesday has a reasonable probability of being a green day. QuantumFlow projects SPY's range for Tuesday to be 514 to 522. The range continues to expand, which will bring in more volatility and more directional trading. Trade with the trend and ride it level to maximize profits. QuantumFlow's weekly lineup service has 2 long calls on SNAP and WBA expiring on Friday. Given today's weakness, both are underwater. WBA was punished due to Medicare keeping the rates it pays insurers for managed care fixed for 2024. Stocks like Humana and United Healthcare, along with CVS, have been pummeled since the close yesterday. Unfortunately, WBA is falling in sympathy to CVS, but we still have 3 days to expiring, so we will hold this position to see if we can turn a profit. QuantumFlow's Play of the Day service took an overnight trade on SPY today, buying the 518 calls, but closed it after being in for only 24 minutes with a nice 22% profit. Deal positioning for Wednesday to the upside has dealers buying 519, 520, and 521 calls, while selling 523 to 526 calls, implying positioning which favors the upside for tomorrow, but limited to 523. To the downside, dealers are buying 518 to 515 puts in roughly the same size as the calls that they are buying, implying the balance at the current level with dealers positioned for either a rally or a decline. We tend to favor a rally given the market likes to look left and move right, which implies higher prices on Wednesday. If 518 does fail, expect to see 515 before finding any major support. We continue to recommend buying protection for any long portfolio. Looking further out to Friday, we see dealers buying 519 to 522 calls while selling 523 and higher calls. They are also loading up on puts from 518 all the way to 510, and they are buying significantly more puts than calls, which implies more fear and a higher risk of lower prices. We mentioned yesterday, dealers are taking great strides to protect against any downside risk, and for the rest of this week, this has only become more apparent. Would it surprise anyone to see a 50% pullback from the all-time highs? It shouldn't, because this is the average retracement in the S&P each year for the last 50 years. Again, dealer positioning changes each day, so to be sure to check in with QuantumFlow's pre-market analysis and post-market recaps to understand how dealer positioning will affect the day's price action. Tim posts in the pre-market by 9 a.m., and we post these market video recaps typically by 9 p.m. Eastern Time. QuantumFlow strives to deliver actionable intelligence you can use in your day's trading. Good luck and good trading.